Welcome back to the Crypto channel, everyone. My name is Josh, and right now, Bitcoin is still getting extremely close to possibly confirming this bearish pattern on the daily time frame as more Bitcoin liquidity, more liquidation levels are building to the downside, but we also have new targets to watch out for to the upside, which I'll talk about in just a moment, alongside the fact that BlackRock just sold a bunch of Bitcoin yesterday, which I'll talk about in just a moment, while Ethereum is still hanging on to this important line of support, while Chainlink in the short term is trading within this area of support, while Solana is coming in for another retest of this short-term area of support, while Cardano is technically still playing out this bearish divergence, but is potentially approaching the end of this bearish divergence. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, just before we take a look at the Bitcoin charts today, taking a look at the Bitcoin news today, because yesterday on Friday, we saw a decent net outflow, not as bad as Wednesday, but a decent net outflow yesterday. This time around, it was a net outflow of around 150 million US dollars, leaving the spot Bitcoin ETFs just yesterday. So obviously on Wednesday, we saw a net outflow of over $500 million US dollars. Obviously that was much worse, but unlike what we saw on Wednesday, the 8th of January, we actually saw a larger outflow from specifically the BlackRock ETF on Friday versus Wednesday. And so, of course, earlier in the week, we were seeing massive inflows, especially on Tuesday. BlackRock had a massive inflow, which means they bought a lot of Bitcoin on Tuesday. But then on Wednesday, they saw an outflow of around 124 million. And then just yesterday on Friday, BlackRock alone saw an outflow of around 183 to 184 million US dollars, which essentially means they sold over 180 million dollars worth of Bitcoin just yesterday. Because in case you're new to all of this, these are spot Bitcoin ETFs, which means the ETF providers like BlackRock or Fidelity, for example, are having to buy or sell Bitcoin backing the ETFs, whether or not they see inflows or outflows. So of course, if they see inflows, that's money coming into the ETFs, which means say BlackRock or Fidelity, for example, if they're seeing inflows, they have to get that money to buy Bitcoin in order to back the ETFs, or vice versa. If they're seeing outflows, that means investors withdrawing their money out of the ETFs, and BlackRock or Fidelity or basically any of these ETF providers seeing outflows have to sell the Bitcoin backing the ETFs in order to pay out the outflows in US dollars. And so that is the situation right now on the Bitcoin ETFs. We did see a little outflow yesterday, but of course over the weekends the stock market's closed for trading, so we have no inflows or outflows over the weekend. But with that being said, taking a look at the Bitcoin charts today on the weekly time frame, technically speaking, we can still remain within a larger bull market despite seeing short-term dumps along the way. So not much has changed here on this weekly time frame over the last few days. And if we're looking at this weekly Bitcoin chart, of course, we're still losing bullish momentum in the weekly Bitcoin MACD, very similar to what we saw pretty much exactly 1 year ago at the end of 2023, entering into early 2024. And of course, what happened last time was a lot of choppy sideways price action, a large sideways consolidation range with short-term dumps and short-term bounces back to the upside for a couple of months or so, since around early to mid-December was when that started, all the way up until basically the very end of January. And right now we're seeing something very similar. And obviously I've been talking about this for around a month, and I continue to expect this sort of price action at least for the next week, maybe the next 2 weeks or so. So I've been saying around the second half of January is when we could potentially begin the next significant move. But until then, just in the meantime, obviously expect a lot of choppy sideways price action, so more of the same. And if we're taking a look at this 4-day Bitcoin chart, the super trend indicator is still sitting in the green, indicating a larger bullish trend or a bull run. And if we're taking a look at this weekly Bitcoin chart right here, of course, we're still seeing this massive bearish divergence on the weekly time frame, which, as I've been saying for around a month, this is the first significant warning signal on the larger time frames that we've seen in really this entire bull market. Of course, we did see a small bearish divergence right here on the weekly time frame, and that resulted in a bit of a dump over the next 1 month, approximately around 1 to 2 months before we eventually recovered. And so, as I've been saying, a bearish divergence by itself is not enough to fully confirm a massive reversal into a bear market, because of course, even though that happened this time back at the end of 2021, obviously there was other factors also causing the 2022 bear market, like rapidly increasing interest rates by the Federal Reserve and other factors like the lunar crash, for example, right around here. But what this does mean is that at the very least, over the next couple of weeks potentially, we're likely going to see a continued cool off from this bull run right here. So I wouldn't necessarily expect a massive amount of bullish momentum in the next 1 or 2 weeks, and instead either some more choppy sideways price action or perhaps a little bit more of a pullback within the next 1 or 2 weeks or so as the most likely outcome based on this bearish divergence. And if we're taking a look at this weekly Bitcoin chart, of course, we still have a lot of resistance based on this 1618 Fibonacci extension level at around 102,000 approximately. But of course, even if we see a bit of bearish price action, whether we're bearish or bullish, we can make money in either scenario with long positions or short positions, for example. So let's just say during a bullish move, we can long that move or simply just buy and hold in order to make profit along the way to the upside. Or in a bearish scenario, if the prices are falling, of course, we can place some sort of short position, for example, and make profits along the way to the downside. So it doesn't matter if the prices are bullish or bearish, we can make money in either scenario as crypto traders. And if you're wondering what exchange I use to take these sort of trades in the price of any crypto, personally, I take a lot of my trades over on BTNX, so I'll make sure to leave a link to BTNX below this video in the description and in the pinned comment. And if you use that link, it'll take you to this page right here where you can claim an exclusive deposit bonus that you can only claim using that link. So if you simply just click that link to make your account and then deposit $100, you get a $20 bonus. Or if you deposit $500, you get a $100 bonus. Or if you deposit just $1,000 and start trading, you get a $200 bonus straight into your new account. But once again, that's only available if you use the link below this video to make your BitNex account and start trading on that account. And so if you're going to be trading crypto anyway, you might as well check this out. Once again, first link below this video. And also, in case you're wondering, BitNex is a no KYC exchange, which means you can access it from basically any country in the world without needing any KYC. But as always, check your local regulations when it comes to trading crypto. And for whatever reason, if you don't want BitNex, there is also Bybit as another option out there, another exchange that I also trade on. So I will also make sure to leave a link to Bybit below this video in the description and in the pinned comment. But with that being said, taking a look at this 12-hour Bitcoin chart, and right now the price of Bitcoin is still holding above this very important area of support, sitting in between around 92,000 to 93,000. So like I've been saying since before we hit that level, expect a lot of support at around 92 to 93k, and obviously we've seen multiple bounces from that area. And if we were to see a confirmed break below around 92,000, so candle closes below 92k, then in that case the next level of support I'll be watching would be sitting at around 87,000 as another important level of support. But just before 87,000, we could find a bit of short-term support at approximately 89,000 or so, just underneath 90,000. But once again, 87k is an important level, but 92k is a very important level for the price of Bitcoin, because as I've been saying recently here on the channel, if we see a confirmed break below 92,000, that would activate this bearish head and shoulders pattern on the daily Bitcoin chart, with the neckline sitting at just above 92,000. And so if we see that daily candle close confirm below the neckline, below 92,000, not only will that mean a break below this important area of support right here, that would activate this pattern, setting up a bearish price target for this pattern, sitting at just above 80,000 at around 80 to 81k approximately. So from around 92,000 to that price target, that's around a 12 to 13% move towards the downside. And so of course, that could be a likely scenario for the price of Bitcoin if we first break below 92,000. Obviously, as of right now, we've not yet confirmed any break below this important level of support. So for now, that is still acting as support, which is something to pay attention to. But just be aware of the fact that if we first break below that support with confirmation, so candle closes below that level, then that would be very bearish, setting up a bearish price target. But of course, we can take advantage of that opportunity with a potential short position, for example, if you're open to trading crypto with these short-term moves here. But as of right now, because we have not broken below that support, that short position is not in play, that trading strategy is not in play, because the price target only activates if we break below 92k. And if we're taking a look at this Bitcoin liquidation heat map, of course, we still have a growing amount of liquidity sitting at pretty much exactly 91,000 and just underneath 91,000. So if we break back below that area on the price chart, that will liquidate a bunch of long positions, which can cause a long squeeze, the opposite of a short squeeze, which can accelerate a drop towards the downside if we break below that area on the chart, below around 91,000. And so we have a lot of different things all pointing towards around 91 to 93k, give or take, especially around 92k, right around there. Very, very important level on the price chart. So if we break that level, expect much lower prices coming soon if we first break that level. But for now, obviously, we're defending that level, which is some good news here in the short term. And if you're wondering about other points of liquidity to the upside, we have a small amount at approximately 96,000, another small amount at approximately 99,000, and a decent amount of liquidity starting to grow in between around 103,000 to 103.5k. And if we're taking a look at Ethereum on the weekly time frame, right now the price of ETH is still possibly forming a massive inverse head and shoulders pattern. But as I've been saying recently here on the channel, in order to confirm this pattern, we need to see a recovery very, very soon in the next few weeks or so, back up towards around 4,000. And then, of course, we need to see a confirmed breakout with at least a weekly candle close above around 4,000 to 4.1k in order to confirm this pattern right here and confirm the bullish price target for this inverse head and shoulders pattern. But remember, right now, this is not active. It's not in play because we've not yet seen a confirmed breakout above the neckline. And if we're taking a look at this 3-day time frame, right now, the price of ETH is still trading right around this important Fibonacci level of support, sitting at just above 3.2k, closer towards around 3240, give or take. So, of course, in the short term, that is still acting as major support. But if we see a break to the downside below that Fibonacci level, and especially if we confirm a break below around 3.2k, then in that case, we could find a small amount of support at close to 3.1k based on these lows right here. But below that level, the next important level of support based on these Fibonacci levels and also previous support and resistance is sitting at around 2.8k as the next significant level of support below around 3.2k. And if we're taking a look at this daily time frame, of course, we still have this area of support to watch out for in between 3,000 to 3.1k, and we have this area of resistance to watch out for in between around 3430 to 3560. So at least as of right now, in the somewhat shorter term, the price of ETH is currently in a bit of a sideways price range, just chopping around sideways between that area of support and resistance. But not a lot has changed for the price of Ethereum over the last 1 day. So getting straight into Chainlink on the 8-hour time frame, because of course on the larger time frames, not much has changed over the last 1 day for Chainlink. So looking at this 8-hour time frame, and right now Chainlink is still simply trading in this area of support, sitting in between around $19.50 to $20.50, and previously we've found a lot of support in that exact price range right there. So for now, that is obviously the area of support to pay attention to. But if we see a break below around 1950, especially with candle closes below 1950, in that case we could find a small amount of support at around 1870, but below that I'll really be watching at around 1750 as the next important support if we first break below around 1950. But overall, Chainlink is actually looking neutral to bearish right now in terms of the trend in the short term, because if we're actually looking at the highs and the lows, technically here in the short term, we are forming lower highs and lower lows, but ultimately because we're running into major support, that is why I'm saying sort of neutral to bearish. We're not exactly looking bullish at all in terms of the trend here, but of course, during a bearish trend, we can see some little bullish moves here and there along the way to the downside, and even in a neutral trend, in a sideways price range, of course, that is made up of short-term bullish and short-term bearish price action during a sideways price range. So overall on the trend, I'm currently neutral to bearish. But of course, if you want to know what's most likely going to happen for Chainlink, take a look at what Bitcoin is doing. If Bitcoin breaks below 91 to 92k, it's very likely Chainlink will break below this support. But if Bitcoin sees a major bounce and avoids that break to the downside, Chainlink could also likely play out something similar. So watch for the Bitcoin price in order to figure out what's most likely going to happen for Chainlink and a lot of major altcoins. And with that being said, if we're taking a look at Solana on the 8-hour time frame, Solana is coming in for another test of this important area of support. Really, we have this level of support at around 180, but we also have a bit of an area of support in between around 180 to 183 to 184. So in the lower $180 price range, we do have a lot of support right there based on previous support in the price. And at the same time as the price of Solana approaching reaching a major area of support in the short term. The RSI on the 8-hour time frame is also getting very close to oversold territories, which means that we're getting very close to potentially ending this bearish divergence. Obviously, over the last half a week or so, this bearish divergence has played out very well, but I'll not necessarily rely too heavily on this bearish divergence any longer, considering once again we're close to oversold. We're not there just yet, but we're getting close, and we're also basically running into an important area of support right now. And so in order to expect any more significant bearish price action like this, for example, we have to break below obviously 180. And if that were to happen, if we see candle closes below $180, expect to move down towards this area in between around 156 to 161. So basically from around 180 straight down towards 160. That could be a likely scenario if we first break below 180. But for now, that is still acting as support. And as for resistance, we do have a lot of resistance in between 200 to 205. So ultimately, Solana, as of right now in the short term, is currently within a bit of a sideways price range. And if we're taking a look at the price of Cardano as one of the top suggested altcoins in the comment section below these videos, looking at the weekly time frame, right now we're continuing another rejection from this area of resistance, which is of course the golden pocket area of resistance, which is the most important Fibonacci area on the price chart, and that's sitting in between around $1.13 to $1.23. So in that area, expect a lot of resistance. As I actually said months ago now on the channel, since before this first rejection, I said expect a lot of resistance right there. But as for support, we do have important support right here, this previous 50% retracement level based on previous support and resistance as well, and that's sitting at around 82 to 83 cents. So just above 80 cents, expect a lot of support right there. And obviously we have already seen one decent bounce from that level. And if we're zooming into the shorter term, looking at the 4-hour time frame, obviously over the last few days or so, this short-term bearish divergence has been playing out very nicely in the form of a short-term pullback followed by a bit of choppy sideways price action, which are the most common outcomes from a bearish divergence. But considering the fact that just in the short term here on the 4-hour time frame, we're starting to possibly form some higher lows and higher highs, not only in the price, but also in the 4-hour Cardano RSI, this is an invalidation signal to help to invalidate this bearish divergence, because of course this is bullish price structure. Higher lows and higher highs is bullish price structure, and so due to this happening right now here in the short term, I would not necessarily rely too heavily on this bearish divergence to continue to play out much longer, and instead we could actually see a little bit of a slight bullish relief maybe over the next 1 or 2 days as a likely scenario, just talking about the short term here. But ultimately, when it comes to important levels to watch out for, I'd really be paying attention to this weekly time frame, of course, that golden pocket area of resistance, and at around 83 cents approximately as significant support. So for now, Cardano is kind of in a massive sideways price range based on these levels right here. And once again, if you want to trade these moves in the price of any crypto, check out those links below this video to those exchanges if you want to claim those extra bonuses using those links. And if you want to actually know how to trade crypto, no matter if the price is bullish, bearish, or chopping around sideways, you can profit from all of that price action by watching these videos popping up right here on your screen. The video in the top left shows you how you can profit from bullish or bearish price action using long positions or short positions, and the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. And by the way, thanks for 200,000 subs, and I'll see you all in my next video.